Hi guys. So in this, let us quickly start with part 2 of our MCQ compilation. So whatever the institute recently released MCQs, we have already covered very much in detail. Now it's time, sir, are those MCQs really sufficient or do we have to prepare for some another set of MCQs? Guys, first preference you have to give to our institute released MCQs only. Once that was done, then we can focus on some whatever additional MCQs which I personally feel important. And not only that, whatever exam MCQs which it have been asked, and some questions, so some MCQs whichever I feel relevant, I have taken those from MTPs as well. Okay, MTPs or MQPs, whatever you can call, from those also I have taken relevant questions. Okay, so this will make our entire MCQ compilation a very effective. Okay, fine. So without making any further delay, let us quickly start with the things. Okay, fine. So some standards or some chapters, what I can say is we have not discussed that much in our regular batches or fast track batches or whatever it is. So what I will be doing is whatever important from MCQ perspective, I will explain those standards also. First concept I will explain, then only I will move to the what did I say MCQ. Okay, fine, sir. So first part, the question which I can ask is basically the applicability of Ind AS. So always remember guys, we have already know that sir, Ind AS are not applicable from a single date. They have started adopting phase-wise applicability. They have divided applicability into different phases. The question is, sir, do we have to remember all those things? Answer is no. You just have to remember two dates. Those are applicable for a company with a net worth of 250 crore or more from the date 1st April 2017. This you have to remember. Second thing though, but if you are an NBFC, from you, the applicability is 1 year exactly later from the date. So normal companies, if your net worth is 250 crore or more, for you the date of applicability is 1st April 2017. But sir, I am an NBFC. Therefore, for you, applicability will be 1 year later. That is nothing but 1st April 2018. Okay? Yes, sir. Next part. A company showed a net profit. This question though, don't separately see this question as a typical standard type of a question. Okay, of course there is little bit interlinking with a particular standard, but even if you don't know anything about that standard, till aram se you can solve this question. Okay, fine, sir. So let us get into the question. So the first part though, they have given a company's net profit is 7,20,000 for quarter number 3. For which quarter? Quarter number 3. Fine, sir. After incorporating the following. While calculating net profit, it have already considered these two adjustments. Okay. The first thing though, okay, fine. So bad debts of 40,000 rupees incurred during the quarter, but 50% of the bad debt have been deferred to the next quarter. Oh, what we have did is, sir, total bad debt of 40,000 rupees that is related to current quarter. But what we have did is we have deferred 50% to the next quarter. I have deferred 50% in the next quarter, which means while calculating the profit of 7,20,000, I have considered only 20,000 as bad debt. But sir, we cannot do so. In which quarter income have earned or in which quarter expense is there, expense is incurred, you have to recognize the complete thing in that quarter only. No deferment and no preponement is allowed as per the standard. Okay, so what we have to do, sir? 7,20,000 is the normal profit which they have got. So from this 7,20,000, what I have to do is I have to deduct a further bad debt of 20,000 rupees because this is also related to quarter number 3 only. Okay, fine. It should not be allowed to be deferred. Okay, sir. Extraordinary loss of 35,000 incurred during the quarter has been fully recognized in the quarter. Extraordinary loss is there, but that is related to quarter 3. That is fully recorded in quarter 3. It should be recorded in quarter 3 only. It is also recorded in quarter 3. Sir, do we have to make any adjustment? Answer is no. Okay, this should be recorded in quarter 3 and the company have also recorded in quarter 3 only, so no adjustments. So finally my profit will be 7,20,000 minus 20,000, which means the answer will comes to 7 lakh rupees. Okay, yes, so So these are the MCQs which we have to focus on the basics ka chapter. Okay, fine. So next standard, let us move to Ind AS 8. Let us quickly move to Ind AS 8. Okay, fine, sir. Let us quickly have a quick concept recap of this Ind AS 8. Only again, I am saying whatever things which are relevant, I will quickly check those relevant things only. Okay, fine, sir. This Ind AS 8 This Ind AS 8 talks about, sir, how to do changes in accounting policies ka adjustment, how to do changes in accounting estimates ka adjustments, and how to do correction of errors ka thing. Only these three things will be explained in this standard. Okay? Yes, sir. Accounting policies, you just have to remember one thing. So till now, I have been choosing FIFO method as my inventory valuation ka technique. But now I have decided to change that to weighted average method. This is nothing but a change in accounting policy. If it is a change in accounting policy, always remember you have to give retrospective effect. Always you have to give retrospective effect. Normally what they will be saying is whatever the accounting policy which you have been following, you have to follow that consistently. But sir, can I change the accounting policy? Answer is yes. You can change the accounting policy only if it is required by Ind AS. Or, sir, changing my accounting policy will give in more relevant and reliable information. If yes, then also we can change. Okay, so these two situations only you are allowed to change the accounting policy. Answer is yes. Sir, accounting policy change, so you have to give retrospective effect. Retrospective means from the starting itself. You have to do the accounting as you have chosen the new accounting policy only. Okay, sir, but it is not possible. Retrospective application is not possible. 5 years back, I have started inventory valuation, but I can't find out the inventory figures of 5 years back. In this case, how much it is possible? It is possible only to do the accounting policy ka accounting, I mean change in accounting policy ka accounting only from the past 3 years, then do that. Otherwise, ignore. Otherwise, ignore. If that is also not possible, you can follow prospectively. Okay, this is more than sufficient. You just have to remember accounting policy change should be accounted retrospectively. That you have to remember. Okay, but you just have to check how much it is possible. Go back and do the accounting retrospectively. So it is not at all possible, then do the prospective effect. Prospective effect. Understood, sir. Next part though, accounting estimate. Accounting estimate, you just have to remember this part. Sir, earlier I have decided useful life of the asset is 10 years. But it is now later I have revised it is only 5. Oh, is this a change in accounting estimate? Answer is yes, it is a change in accounting estimate. Earlier I have decided SLM method will be best useful for me. But now later I have changed my mind and I have decided to use WDV method of depreciation. Sir, can I do so? Is it allowed under standard? Answer is 100% yes. But whatever you do, just follow consistently. Sir, that is not possible. Or Ind AS is required me to change my accounting estimate. Or what they will be saying is, sir, if it is giving a better presentation than earlier estimate, then you can shift it to accounting estimate. Then you can shift it to accounting estimate. But always remember, guys, if it is a change in accounting estimate, you have to give prospective effect and not retrospectively. From the date of change, you have to give the effect. That's it. From the date of change, you have to give the effect. That's it. Sir, what about prior period items? What about prior period errors? Sir, if there is any error which is committed in the prior period, always remember to do the retrospective effect only. Always remember that you have to do the retrospective effect only, sir, but that is also not possible. Then go for prospective application. Then you can go for prospective application. Okay, whatever the prior period which is there, that prospective application you can go ahead and choose. To conclude, changes in accounting policy, inventory valuation changes, inventory method changes, that you have to give retrospective application. Changes in accounting estimate, you just have to go ahead and give the prospective application. Prior period errors also retrospective application. But accounting policy change and prior period errors, sir, it is not possible for me to go back and do the retrospective application, then aram se you can go for prospective application. Okay, this is more than sufficient. Then let us quickly move to the MCQs ka part. Okay, fine, sir. Yes, sir. So first one, Ind AS dash shall be applied in selecting and applying accounting policies. accounting for changes in accounting policies, changes in accounting estimates, and corrections of prior period errors. Sir, it is very tougher question. Sir, what is it 12? Is it 16? Is it 8? Is it 21? Right answer is it is Ind AS 8. Because 12 is related to deferred taxes, 16 is related to PP, 21 is related to effects of change in foreign exchange. Other than this is wrong, this is wrong, this is wrong. So right answer will be Ind AS 8. Okay? Yes, sir. Next part. Changes in accounting estimate results from. This question we have already covered in first part. Okay, so check all of this will be the answer. Next part though. Parallel limited changes its method of valuation. This also I think we have already covered in part 1 MCQs. Okay, yes, if it is inventory valuation ka change, you have to do retrospective effect. You have to do retrospective effect, and it is a change in accounting policy. It is not an error. It is a change in accounting policy, and you have to do retrospective accounting. Okay. Yes, sir. Next part. Pindani Limited changes its method of valuation of inventories from weighted average to FIFO. The accountant opines Ind AS 8 is applicable. This is also a change in accounting policy, and you have to do retrospective effect. So again, option C is going to be it. Option C is going to be correct. Okay. Yes, sir. So Ind AS 8 is also completed, guys. Very simple, short and sweet. Just don't go more into that. Just don't go more into that. Okay, don't waste your time. Whatever is relevant, I have explained just now. You just have to recall that part, just read it 2 to 3 times. Whatever the MCQ which I can give, aram you can score. We have not discussed that much in our regular classes because spending this for 1 hour or 2 hours is not at all essential. Okay? Yes, sir. So next part. Quickly let us come to Ind AS 12. Quickly let us come to Ind AS 12. Okay? Yes, so little bit important. Deferred taxes ka standard. Deferred taxes. Okay? Yes, sir. Let us understand. Okay? Fine. Guys, I think you guys have already know that. So as per our accounts, we will be preparing one net profit as per P&L account. But as per income taxes also, we will be preparing our PGBP income separately. Sir, are they both same? Answer is no, Baba, no. They are not same. Because in income tax, the depreciation rate is totally different. In fact, the method of depreciation itself is totally different. In income tax, we will be following something which is called as a block-wise depreciation. But in accounting, we will be following SLM method of depreciation. Individual asset-wise you have to do. But income tax mein SLM is not at all applicable for all the entities. Only for some special person it is allowed, power sector. Okay, just leave that. But others you have to follow only WDV method, that too block-wise accounting. Sorry, block-wise method of depreciation. The thing is, as per accounting, my income will be totally different. As per income tax, my income will be totally different. Sir, is the only depreciation the reason? Answer is no. In income tax, if you remember, there are some expenses which will be disallowed. If you remember, payments in excess of 10,000 in cash will be disallowed. Payments to related parties in excess of fair market value will be disallowed. If you remember, these are some expenses. Interest to partner in excess of 12% per annum. All these things are disallowed as per your income taxes, but not as per accounts. Some expenses will be allowed as deduction only on payment basis as per PGBP, income tax. But such kind of things, so we have never seen in accounts. So whatever I am saying is, accounting profit means whatever the profit which you have calculated as per your P&L account. But on that amount, you would not be paying the taxes. I will be paying the taxes on my taxable profit. Okay. So this taxable profit now, I will be computing as per my own income tax laws. Any disallowances? Yes. I have to give the effect of those disallowances. Okay, sir, some expense is there. I have to deduct the TDS, but I have forgotten. I have not deducted TDS. 30% will be disallowed as per income tax. But as per accounts, we have never seen such kind of disallowances. Oh, so what they are trying to say is there will be some differences between this accounting profit and taxable profit. Sir, the reasons are different types. First thing though, some differences are timing differences. Timing differences means as per accounts you will be having different depreciation. As per income tax you will be having different depreciation. The thing is only because of rate of depreciation your difference is there. Because of which It may be possible that as per income tax, I am getting more depreciation in the current year, which means I am getting more deduction. In some cases, I will be getting lesser depreciation as per income tax, which means I will be getting less deduction. But that will be corrected in the future. If it will be corrected in future, I will be considering those differences only while calculating deferred tax. But there are some permanent differences. All these disallowances are there. Na? I have made more than 10,000 in cash. That is permanently disallowed. It will never be reversed in future. This kind of permanent differences though will not be adjusted in deferred tax computation. Understood? Yes, sir. So next part though. This is a little bit important. Deferred taxes, we have understood that only temporary differences will be considered. The best example you can consider depreciation. Best example you can consider depreciation. I have already explained in part 1 ka MCQ compilation relevant example. Okay? Yes, sir. But here what will be there? Let us again check one example, then only you can understand. Okay, just a minute, just a minute, just a minute. Okay, let me open this part. Okay, sir. There is one asset whose cost is 10 lakh rupees. Assume as per income tax also we are having only this asset in the block of assets. Okay, so what I am trying to say is, sir, see, as per income tax, the rate of depreciation is 20%. But as per accounts, assume the rate of depreciation is 25%. Assume the rate of depreciation is 25%. Now, sir, year 1, year 2, year 3, year 4, year 5. Try to understand from expense perspective. First year of accounts may I will charge 25,000 rupees as a depreciation. But here I will only charge 20,000. As per income tax, my depreciation is only 20,000. Similarly, I will charge 25,000 for second year, 25,000 for third year, and last year maybe 25,000. Sir, in fifth year, will I get any depreciation? Answer is no. Sir, you have already claimed complete depreciation in the first 4 years only. Oh. When it comes to income tax, na, if you observe, second year I will get 20,000 depreciation. Third year I will get 20,000 depreciation. Sir, fourth year also I will get 20,000 depreciation. If you check na, okay, assume it is 1 lakh only. My bad. Think 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. Now understand. Sir, as per income tax, asset ka value is 1 lakh. But after completion of 4 years, na, my asset ka balance has not become zero. It is still 20,000. That 20,000 will be allowed in future. That 20,000 will be allowed in future. Now understand, guys. As per accounts, my depreciation is 25,000. But as per income tax, na, my depreciation is 20,000. I will get lesser deduction. I will get less deduction, which means while calculating taxable profit, I have to consider only this, not this. But in my accounts now, I will consider this only. Sir, but difference is there. Is it taxable or permanent? Right answer is it is taxable. Sorry, it is temporary difference. It is not permanent. It is temporary difference. Because in future, after 5 years, asset balance will be zero. Here also, it will be zero. Whatever 5,000, 5,000, 5,000, 5,000 excess depreciation I have claimed in 4 years as per accounts is reversed in fifth year as per income tax. Now what they are trying to say is just remember what I am trying to say. In future, if any person is getting an extra deduction, he have to create a deferred tax asset. He have to create a deferred tax asset. First, you have to identify, sir, is it a temporary difference or a permanent difference? Right answer is it is a temporary difference. Sir, how much is the difference ka amount? Let us write 5,000, 5,000, 5,000, 5,000, and here I will get a 20,000 is difference. Oh, in future I will get a deduction. I will get a deduction, which means all these items though I have to create deferred tax asset. This amounts multiplied by 30%, I have to create something which is called as a deferred tax asset. Last May, I will use this deferred tax asset ka balance to get this deduction. And thereby it will be nullified. And thereby it will be nullified. Try to understand. Sir, is it possible that in all cases it will be like this only? Answer is no. Sometimes as per income tax, you will get more depreciation. At that time, currently you will get more reduction, which means tax base will be exhausted fastly rather than accounts. Which means here in future you have got the deduction. But if it is reverse, in future I have to pay the tax. If I have to pay the taxes in future, I have to create something which is called as deferred tax liability. In future, if I am getting any deduction for any asset, I have to create deferred tax asset. In future, if I am paying any taxes, if there is any need for me to pay the taxes, you have to create the deferred tax liability. I hope this point you have understood. This is more than sufficient for this standard. Okay, just repeat whatever I have said in this standard. Aram se, just fix this example in your mind. Whoever have asked related to deferred tax, with this example, Aram se you can make that other person understand. First, you have to understand, then obviously we can make others also understand. Okay? Yes, so quickly come to the concept. Deferred taxes, amount of taxes payable in future. If you are paying taxes in future, but again I am saying guys, you have to consider only temporary differences. Permanent differences should be ignored. So here what they are saying is in future if you are paying taxes, deferred tax liability should be created. But in future if you get any deductions, there we have to create a deferred tax asset. Next thing if you observe, sir, as per income tax, you can carry forward the losses. Because of such carry forward, in future you will get deductions. But accounts may there is no concept of carry forwarding of losses. Carry forwarding and set off up to 8 years. That concept is not at all there in accounts. But because of the carry forward of losses, will I get future may deduction? Answer is yes. If yes, then we have to around say book deferred tax asset on that item. Okay? Yes, sir. We have understood. That's it. The same thing they will give once again. The same thing they will give once again. Okay. So whatever I have said, just let us understand from asset perspective also. Just let us understand from asset perspective also. Sir, what you are exactly trying to say, let us quickly write. Sir, you just have to understand two things, that first thing to carrying amount and second thing to tax base. First thing to carrying amount and second thing to tax base. Sir, carrying amount is nothing but as per accounts. Tax base is nothing but as per income tax. Try to understand. Sir, first thing though, as per accounts, cost of the asset is 1 lakh rupees and first year though I have claimed 25,000 depreciation, which means the account ka balance, carrying amount ka balance is how much, sir? 75,000 as per accounts. But income tax mein it is 80,000. Oh, second year ka value though 50,000. But here it is 60,000. Third year ka value though 25,000. Here it is 40,000. Fourth year ka value though 0. But here it is another 20,000. Fifth year ka value though nil. Fifth year ka value though nil. Just to try to understand from asset perspective. Sir, as per income tax, my asset ka value is 80,000. But as per accounts, na, my asset ka value is 75,000 only. Just to try to understand, sir, which value is more? Tax base is more. If tax base is more, na, in future you will get more deductions. In future, I will get 80,000 ka deduction. But as per accounts, you will only get 75,000. Sir, which is more? Tax base is more. If my tax base of an asset is more, I will get more deduction in future. Therefore, deferred tax asset. Similarly, here 60,000, here 50,000. Sir, what is more, sir? 60,000 is more. So I have to create deferred tax asset. Sir, here 40,000, again deferred tax asset. Here 20,000, again I have to create the deferred tax asset. I hope you guys have understood the problem from asset perspective also. You just have to compare tax base and carrying amount of asset. Asset exact opposite is liability also. Okay. Fine. Okay, that's it guys. It is more than sufficient as to what we have covered. You can aram se by heart this part. Okay, you can aram se by heart this part. If it is taxable temporary difference, which means sir, my carrying amount is more than tax amount. My carrying amount is more than tax base, then in future I have to pay taxes, therefore deferred tax liability should be created. Okay, just remember one, everything you can aram se copy. If my tax base is more than the carrying amount, I have to create deferred tax asset. For liabilities, exact opposite. Carrying amount of liability should be more than tax amount, then deferred tax asset. Whatever I have said is same. If tax base is more than carrying or carrying is less than tax base, in both cases deferred tax asset only should be created. Feelings are mutual. Okay, just don't aram se confuse with the part. Okay, if tax base is more of an asset, I will be getting more deduction in future. Therefore, deferred tax asset. Just by heart this thing and we are sorted guys. Let us quickly move to MCQs. Okay, let us quickly move to MCQs. Okay, fine sir. Ouch. This thing we have already covered in MCQs. Part 1. If tax depreciation is higher, I will get more reduction right now. If I get more deduction right now, in future I have to pay taxes because my tax base will be utilized fastly now. Therefore, in future I have to pay the taxes. In future, if you have to pay the taxes, you have to create deferred tax liability, and that's it. Second part also we have already covered. Okay. Yes, sir. Quickly come to third part, guys. Little bit important, so let us quickly check the part. Sir, first thing though what have happened is in the first quarter, it earned a pre-tax profit of 3 crore rupees, which means sir PBT is how much? PBT to 3 crore. This is of quarter 1, quarter 2, quarter 3, quarter 4 details also they have given. They are expecting it will incur 1 crore loss in each quarters. The rate of income tax is 30%. The management believes that since the company has zero income, see, first quarter में 3 crores का profit, 1 crore loss, 1 crore loss, 1 crore loss. So what is the total income? Zero. They are saying our total income is anyways zero. Therefore, there is no need for us to book the tax expense only. So they are asking you to calculate the amount of tax expense to be reported in the first and the fourth quarter. Company is saying, okay, in quarter 1 we got 3 crores. But wait, we are estimating even if for all the 4 quarters put together, we are estimating that we will be getting losses only. So we will not create any asset. We will not create any tax expense only is what the income tax department is saying. So what you have to check is, sorry Baba, this is not correct. In first quarter, na, whatever the tax is there, just to create that amount. Sir, what is the tax amount? 3 crore into 30%, which means 90 lakh should be written. Second year, to 1 crore pay 30 lakh, you have to reverse. Here also 30 lakh I have to reverse, and last also 30 lakh I have to reverse. So the correct answer will be 90 lakh expense will be booked in the first quarter. 30 lakh reversal of income tax will be done. Reversal of tax will be done in the last quarter. Okay? Yes, sir. We have understood the concept. Quickly come to next part, guys. Little bit technical question in this standard. So just aram se check this question. Number of times you will get the concept very clearly. Okay? Yes, sir. So understand. The company has charged a depreciation of 7,42,900 in its books of accounts, while as per income tax computation, the depreciation available to the company is 865,400. They are asking us to compute the deferred tax asset amount and deferred tax liability. Both they have asked. Okay, fine, sir. Understood, sir. So first part, to sir, see, as per accounts, my depreciation is 742,900, sir. As per income tax, my depreciation is 865,400. Just try to understand. Sir, which is more? Sir, obviously my income tax wala depreciation is more, which means currently I will get more deductions. If I am getting more deductions currently, my tax base will exhaust fastly, which means my tax base will be utilized fastly, which means in future I have to pay the taxes. I will not get deduction. I have to pay the taxes. Therefore, this difference will be called as taxable temporary difference, and I have to create a deferred tax liability in this case. Sir, how you have to calculate that? Now, just to calculate the difference, 865,400 minus 742,900 into 30% you have to do. Into 30% you have to do. Just let me check the correct figure or not. 865,400 minus 742,900 into what is the tax rate? So sorry, 35% is the tax rate. Therefore, deferred tax liability though I have to create 42,875 deferred tax liability. ठीक है sir. Next, sir, the company had made provision for doubtful debts for 54,000 during the year. Guys, as per income tax, bad debts will be allowed as deduction but not provision for doubtful debts. That should be actually become bad, then only you will get a deduction. Oh, that should be actually become bad, then only you will get deduction. But provisions pay, you will not get a deduction. Which means it will not reverse in the future. Which means it is a permanent difference, guys. On provision, you will never get the deduction. Which means this is a permanent adjustment in your accounts, and this thing will never come in income tax only. Which means it will not be reversed in future. Therefore, I will ignore this part. I hope you have understood the point. Okay, fine, sir. Next part. The company has debited 6,23,500 in their P&L account. That is a share issue expenses. We can call it as preliminary expenses also. They have debited in the P&L account. Okay, but income tax is saying, "Arey Baba, we will not give deduction from this year. We will give deduction from the next year." From the next year, they are saying that we will be giving deductions. Okay, sir. But as per accounts now, what you have did you know? You have completely charged 6,23,500 in the current year only. But income tax may you have charged nothing in the current year. Income tax may I have not charged anything in the current year, which means that in future, you understood, in future, I will get a deduction of this total 6,23,500. In future, I will get 6,23,500 ka deduction. Oh, sir, what is the difference? Difference is 6,23,500. That is called as a deductible temporary difference. Sir, why deductible? Aremba, very simple. In future, will you get deduction or you have to pay the taxes? Answer is I will get deduction. So 623,500 into 35% if you do, you have to get 218,225. 218,225. Yes, sir, I have understood. Since I will get a deduction in future, this should be deferred tax asset, sir. Okay, sir. 218,225. Yes, sir. Next part. The expense of 7,84,500 has been charged to the P&L account, which are disallowed under income tax. Oh, as per income tax, it is disallowed, but as per accounts, it is allowed. Sir, if it is disallowed as per income tax, will it be allowed in the future? No, it is a permanent disallowance. Therefore, it is a permanent difference, and we have to ignore even this point also. Permanent differences are always ignored. Okay, sir. Then what about 50 points, sir? Check this. Donations the company have given of 2 lakh rupees has been debited to P&L account, and only 50% will be allowed as deduction as per income tax. I think you already know 80G. I think you already know 80G. Okay, or 80 GGB. Those kind of donations are there. Na? Yes, sir. The company have given 2 lakh rupees donations, but income tax is saying, wait, only 50% will be allowed as deduction. Sir, what about 50% will I get in future? Answer is no. which means it is also a permanent adjustment and therefore no account. So no adjustment. So that's it. Answer is done. Answer is done. Deferred tax liability of 42,875. Asset to 2,18,225. That's it. That's it, guys. Okay. So right answer will be A. My sincere question, my sincere advice, if this kind of an MCQ comes in the exam, just understand one thing. The psychology of student should be don't worry at all. Okay, just to check the question. This kind of question, though, if 5 points are there, definitely minimum 2 points are irrelevant for us. Just fix in that. Minimum 2 points will be irrelevant, like that only they will give this kind of a question. Okay, I hope you are understanding whatever I am trying to say. By having the first reading of the question only, I have understood that in this question, though, some permanent adjustments are there. Okay, which means this one, this one, this one, so these should be ignored. If all these things are ignored now, only this thing and this thing will become relevant. My advice is, this is a difficult MCQ. This is a difficult MCQ. If this kind of an MCQ comes in exam, most of the students, trust me, 90% of the students don't know what to do, but you are 10% among them. You already know what to do if this kind of an MCQ comes. Don't waste your time in solving this MCQ in the first reading only. This type of MCQ. So you have to solve the entire question. Then we have to move to this kind. Okay? Yes, sir. I hope I have explained the point. Understood, sir. Last question from this standard, sir. Okay, sir. In order to understand this question, now you should have a little bit knowledge of unrealized profit on sale of inventory. This concept we have understood in consolidated financial statements. Answer is yes, we have understood this, sir. Yes. Now let us quickly break down this question. Okay, sir. Surendra Limited parent have sold goods to subsidiary. Okay, sir. Parent is there, sir. Parent is Surendra. Surendra have sold to Narendra. Okay, sir. Surendra have sold to Narendra. So check this. Sale value is 480 lakhs, sir. Sale value is 480 lakh. Let us write the cost ka points also here only. Okay. Yes, sir. Sir, what is the cost ka value, sir? Tell me. Sir, cost ka value also let us write. Plus profit ka value also let us write. Sir, cost ka value to 400 lakh. I think they have only given. If cost ka value is 400, profit should be 80 lakh rupees. And this is my balancing figure. But what have happened, sir? Sir, 50% of the stock is only lying. 50% of the stock is only lying, sir. Sir, what about balance 50%? Balance 50% though sold. What about unsold stock? Sir, out of this 480 lakh, 50% that is 240 lakh is still in the stock. So what you have to do is, sir, on this 240 lakh, how much profit is there? That profit should be eliminated. Sir, how I will get that? Very simple. Sir, whatever the total URP to 80 lakh, but that is for 480 lakh. But currently you are having only 240 lakh. Therefore, the profit will be 240 into 80 by 480, which means 40 lakh will be the URP, sir. Just remember one thing. This 40 lakh is the URP now. Just calculate the tax amount. Just calculate the tax rate on this. Oh, which means 40 into 30%. 40 into 30% if I do, I will get a deferred tax asset of 12 lakh. 40 into 30% if I do, I will get deferred tax asset of 12 lakh. Okay. This option number A will be the correct answer. This is only accounts adjustment. This will not be there as per income tax. Okay, only purely accounting adjustment. It will be reversed in the future also. Therefore, we have to do this kind of an adjustment in this question. Okay, yes, sir. Ind AS is also completed, guys. We have learned only in 20 minutes. Just to be very clear, aram se check this. Okay, easiest part. ठीक है, sir. Next, though, let us quickly move to Ind AS 16 का part. Okay, let us quickly move to Ind AS 16 का part. Okay, sir, let us come to Ind AS 16 का part. Just a moment. Hmm. ठीक है सब. And next section we are exports in this India section I think. So this first one already covered. Second one already covered. Come to third one. Come to third one guys. Okay sir. The first one though. Sir Core Limited has a plan with a carrying amount of 1,20,000 as on 1st April 2022. Cost to 1 for 2022 1,20,000. Okay sir. Useful life to 10 years of which 4 years remain on the date. Oh, useful life to 10 years and 4 years is remain the date. The company decides to revalue the plant to 2,80,000 rupees. The company decided to revalue to how much sir? 2 lakh rupees on 1 4 2022. Revaluation reserve of 80,000 is there. They are asking us to calculate the depreciation to be accounted for in statement of profit or loss as per 22 to 23. Very simple. Sir, see, in this question now, carrying amount is how much? 1,20,000. Revalued amount is how much? Revalued amount to 2 lakh rupees. Revaluation surplus का value तो कितना? Revaluation surplus का value तो 80,000. We just want something which is called as useful life. Balance useful life I can say. Sir, balance useful life to only 4 years. Balance useful life to how much sir? Balance useful life is only 4 years. So see, sir now I have to charge depreciation on this amount. Sir, but what is the useful life? Useful life is only 4 years. So 2 lakh by 4 if I do, I will be getting the amount of depreciation which should be charged every year. 50,000 will be the amount of depreciation which should be charged every year. I hope you have understood this question. Yes, sir. So option number B will be the correct answer. Option number B will be the correct answer. Okay? Yes, sir. Understood, sir. The question is very, very simple. Yes. Next part. On 1/4/19, on 1/4/19, what they are saying is, sir, Rehard Limited purchased a heavy duty equipment of 44 lakh rupees on the date of installation. Okay, useful life to 10 years, residual value to 40,000. Accordingly, the annual depreciation they have only given such a kind institute. Sir, they have forget to give this annual depreciation. So what can we do, sir? Yes, we can do. 4 lakh is the cost minus 40,000 is the residual value. Divide by 10 years. So 36,000 should be your annual depreciation. On 1/4/23, after 4 years of using the equipment, the company decided to review the useful life and its residual value. Sir, after 1/4/2023, on 1/4/2023, after 4 years are done, can first of all let us understand the carrying amount. Carrying amount on 1/4/23. Sir, see, cost to 4 lakh rupees. Each year ka depreciation is 36,000 into 4 I will get the carrying amount after 4 years. See, 2,56,000. Okay, sir, we have understood. Sir, what is the balance useful life, sir? Balance useful life, though, normally 4 years. But our kind institute is saying, sir, balance useful life, remaining useful life is 7 years, sir. Okay, revised residual value to 46,000. Oh, they are asking you to just calculate the revised annual depreciation for the year 23-24, which means around se can do 2,56,000, sir, minus what is the revised residual value, sir? 46,000 divided by balance useful life to only 7 years. It is not 6, it is 7 years, which means 30,000 will be the annual depreciation which should be charged. 30,000. Therefore, D should be the correct answer. Therefore, D should be the correct answer. That's it. That's it. That's it. That's it. Okay, so easy question, guys. Fine, so next question. Narmada Limited owns a machinery which is carried on its balance sheet at the carrying amount of 15 million. Okay. In my balance sheet, there is one machinery which is having 15 million. The fair value of the machinery is 22.5 million. Oh, It exchanges its machinery for a building having a fair value of 30 million and pays additional cash of 4.5 million. As per the relevant index, the profit on the exchange of machinery is, guys, if you remember, now we have already discussed this kind of a similar concept with the name exchange of an asset. Exchange of PPE. Sir, if you remember, you have to give the preference if there is any commercial substance. If there is no commercial substance, based on this, we have to book the profit or loss. Sir, if there is any commercial substance, you have to give the preference to fair value of asset given up. Plus, if any cash is paid, we have to add that cash. Here, sir, building is exchanged for machinery, which means commercial substance is there. So first preference I have to give to the fair value of the machinery given up. It is the 22.5 million. Plus, sir, I have paid some cash also now. How much cash, sir? 4.5 million ka cash also I have made. But what is the carrying amount of the asset, sir? Carrying amount of the asset, though, 15 million only. Carrying amount of the asset, though, how much, sir? 15 million only now. They are asking you to calculate the profit on exchange of machinery. Okay, we'll do something, we'll pass journal entry, then you will aram se understood. Sir, what is the journal entry? See, checking. Sir, new machinery I am getting is a building. So I will write building account debit. Sir, how much value I have to book? 22.5 plus 4.5 I have to write. So 22.5 plus 4.5 if I write, I will get 27 in my debit. Credit, how much I have to write? 2 machinery. Sir, what is the carrying amount? Carrying amount of 15. Okay, sir. Next, I will write 2 bank. I will pay bank also now 4.5. Balancing figure will be your profit, which means 27 minus 15 minus 4.5, which means 7.5. जो है ना, it is nothing but profit on loss on sale of exchange, which means 7.5. That's it, little bit important. ठीक है? Yes, sir. Profit on exchange recorded. आराम से we can solve this question. Fine, sir. Okay. So next question. The carrying value of the PB as on 1st July 2023 is 15,780. This is carrying value as on 1st July 2023, guys. Okay, during the year to 30th June 2024, PPE costing 4,530 were purchased. Okay, here you have to understand only one thing. Sir, here the financial year is not 1st April to 31st March. Here it is from 1st July to 30th June. This is the financial year in this case. This is the financial year in this case. Okay? Yes, sir. So, okay, let us do one thing. They are asking us to calculate the accumulated depreciation for the balance sheet up to 30th June 2025. We are standing in 1st July 2023. The depreciation policy is to charge the depreciation at 20% as on diminishing balance method. So, what we'll be doing? See, 23-24 का depreciation also we want. 24-25 का depreciation also we want. Correct, sir? What is the old asset ka value? Old asset ka value the 15,780 into 20%. So I will get 3,156. Old, new. Okay? Yes, sir. Now, can I calculate the depreciation for 24-25 previous year? See, the value is 15,780. So 15,780 minus this year ka depreciation I have to deduct, then I will get written down value. So 3156, 12,624 I got into 20% I have to do again, then I will get a 2525 ka value. Okay, sir, 2525 ka value I will get. But new asset jo hai na, they are saying this is purchased only on 30th June 2024. So 4,530, here you have to take on cash. Sir, have they given the date of purchase of this new asset? Answer is no. Sir, then what we have to do? Should we assume this asset is purchased at the beginning of the year and can we charge full depreciation, or do we have to assume it is purchased at the end of the year? Okay, it is your call, guys. Just assume if it is purchased at the beginning of year. I think options will not match. So I can't do anything. I have to assume asset should be purchased at the year end. If it is purchased exactly at the year end, in this year, I will not get any depreciation. But for the next year, I will get depreciation. Yes, sir. 4,530 into 20% if I do, I will get 906 as depreciation. Sir, can you tell me what is the total? Total depreciation they are asking, sir. What is the total accumulated depreciation? If I add these figures, I will get 6587. Sir, but there is no 6587 ka option. Are Baba, this is these 2 years ka depreciation. But before also we are having na. Sir, how much we are having? 4,800 we are having earlier also. So just add plus 4,800, then you will get 11,387, which is approximately equal to this thing, which is approximately equal to 11,386. That's it. Balance questions are Bachu questions. Okay, Aram se you can do. Ind AS 16 does not apply to which of the following? We already know that it is not applicable to biological assets other than bearer plants. For bearer plant, Ind AS 16 is applicable, sir. Yes. Mineral resources? No. Mineral rights, mineral reserves? No. So all of the above will be the correct answer. This we have already covered. This is also a repeated kind of a question. Okay, fine, sir. So with this, we have completed finally Ind AS 16 also. We have covered Ind AS 16 also. Okay. Next, let us quickly move to Ind AS 116. Ind AS 116. Okay. So this question is also a little bit trickier question. So trickier question as in, I think this question though they have asked in June 2023 ka attempt, which is the trickiest attempt of yours. Okay, I think this question belongs to that attempt only. So as I have been said, student should choose this question also at the last. At the last, he have to choose, guys. Okay? Yes, sir. Read the question quickly and let us try to solve this fastly. Amla Tulsi Limited, this is related to leases, guys, by the way. Initiated a lease of 5 years in respect of an equipment costing 34,51,640 with an expected useful life of 8 years. The asset would revert back to Bharat Limited under the lease agreement. The unguaranteed, see, lease is only 5 years. But asset ka value is 8 years. We don't care about this. For our focus, lease accounting will be done on the basis of this lease term only. Understood? Yes. The unguaranteed residual value of the equipment after the expiry of the lease term is 2 lakh rupees. Unguaranteed residual value is how much, sir? 2 lakh rupees. The implicit interest rate is 15%. The annual payments have been determined in such a way that the present value of the lease payment plus the residual value is equal to the cost of the asset. Present value of the lease payment plus the residual value is equal to the cost of the asset. Calculate the unearned finance income. Oh, so much they have given. But if you read the question 1 to 2 times, if you find out the lease rentals in the question is aram se completed. If you find out the lease rentals in the question is sorted very simply, guys. But that is the trickier part here. They have not given lease rentals. Sir, what we have to do? They have given a hint. The annual payments have been determined in such a way that present value of the lease payment plus the residual value is equal to the cost of the asset. What they are trying to say is, see, the present value of future lease payment plus present value of UGRV equals to cost of asset. This present value of future lease payments we don't know. But sir, can't we calculate the present value of UGRV? Answer is yes. Sir, what is the UGRV which they have given in the question? Sir, they have given 2 lakh rupees into 0.4972. So 2 lakh into 0.4972 if I do, this we have to find out. So this let us write X equals to, sir, cost of the asset is how much? 34,51,640. Sir, let us calculate Fx equals to, so 2 lakh into 0.4972, I will get 99,440. But here it is plus. So I will send that amount here. So I will get minus, which means X equals to 34,51,640 minus whatever 99,000 ka figure which you got that figure, which means X equals to 33,52,200. Sir, this is my annual lease payments. Now, this is the present value of the annual lease payments. Sir, how I will get this present value? Very, very simple. See, lease payments, into present value annuity factor. R% n years if you do, you have to get this 33,52,200. Lease payments into present value annuity factor of R% 10 years. If you do, you will get this 33,52,200 ka figure. So now what will happen? I want this lease payments. So I just have to calculate this present value annuity factor. If I divide with this, I will get the lease payment ka value. Sir, but what about present value annuity factor? They have given, na, you just have to take the annuity of all these figures. If you add 0.8696 plus 0.7561 plus 0.5718 plus 0.4972. If I add all these figures, I will get 3.3522. Oh, therefore, my lease payments will be 33,52,200 divided by 3.3522. Sir, it will be 1 lakh rupees. It will be 1 lakh rupees. I hope you have understood this lease payment ka calculation. This is yearly calculation. Yearly, I have to pay 1 lakh rupees. Okay, fine, sir. Yearly, I have to pay 1 lakh rupees. But the question is asking you to calculate the unearned finance income. Sir, what is this unearned finance income? Let me solve here. Sir, see, unearned finance income is nothing but gross investment in lease minus net investment in lease. So this gross investment in lease I will get, add the future lease payments plus UGRB. Sir, future lease payments ka value to how much? Sir, 10 lakh we have calculated into 5 years plus, sir, what is UGRB? UGRB ka value to 2 lakh. So, sir, my gross this value to 52 lakh. But sir, what is your net investment in lease? Net investment lease is nothing but present value of these two items. So if I calculate the present value of these two items now, it will definitely come to this figure, which is cost. That's what they have given in the question. PV of FLP plus PV of UGRB equals to cost, which means 34,51,640. 34,51,640. So the right answer will be 17,48,360. 17,48,360 will be my unearned finance income. Just to solve it coolly. Okay, in the question, so they have forget to given the lease payments. We have to indirectly calculate that. I have to calculate this present value of future lease payments. I have taken this as a balancing figure and I have find out this figure I have got. But this is not yearly value. This is present value, which means lease payments into present value annuity factor. If I do, I will get this 33,50,200. Understood? But I want this lease payments. Therefore, I have divided this amount with the present value annuity factor. Therefore, it comes to 1 lakh. They are asking us to calculate the unearned finance income, which will be coming like this. Gross investment in lease minus net investment in lease. Okay. Just watch the video once again. Just get proper clarity on this question. Okay. Okay. So fine, sir. Next MCQ. A company takes a machinery on term for a lease term of 5 years. Release rent of 4 lakh rupees at the end of each year with guaranteed and unguaranteed residual value of 3 lakh. They are just asking you to calculate the gross investment, sir. How I will get? Just multiply the lease term with years. Sorry, with the lease rental with years, just add back this. Don't do any present value calculations because it is a gross investment. Okay. So, sir, how I will get? See, this 4 into 6 plus 3. 27 lakh will be your answer. Just to find out whether they are asking gross investment in lease or whether they are asking net investment in lease or whether they are asking unearned income. Okay. So, next part. Alaknanda Limited took an asset over on a 5-year lease from Mandakini Limited, for which relevant details are as follows. Okay. They are asking you to calculate minimum lease payment. We have already know that. Okay. So this lease payment would be included. Contingent rent would not be included. Contingent rent would not be included in minimum lease payment calculation. Always remember this part. Okay. So this will be wrong. Cost for service also, this is a separate expense. This is a separate expense which should not be included in lease rental calculation. Okay, this reimbursable taxes also should not be included. Okay. Residual value will be included. Fair value also should not be included in the lease payment. Okay. They are saying Alakananda Limited has an option to purchase the asset after a period of 5 years at 2000 rupees. Okay, after 5 years, they are saying if you want to purchase, you can purchase at 2000 rupees. It is reasonably certain that Alakananda Limited will exercise the option. Calculate the minimum lease payment. Calculate the minimum lease payment. Okay, simple. So see, 1000 rupees per month is there. So what I have to do is 5 into 12 into 1000, 60,000 I will get. Plus I have to add this residual value. Plus I have to add, they are saying it will exercise the option. If it exercises the option, it have to purchase at 2000 rupees. Thereby 67,000 will become minimum lease payment. 67,000 will become minimum lease payment. Okay, fine sir. Next part. Or limited lease a machine with a fair value of 165,000 for a period of 5 years. Under the finance lease, the initial direct costs they have given 1250. Present value they have directly given 1,58,400. This is the fair value. Okay, present value to 1,58,400, and they are saying that initial direct cost of 1250 rupees is there. Aram say you just have to think only one thing. Take the present value of the lease. Plus don't forget to add the initial direct cost while calculating. Oh, what should I say? While calculating the ROU asset ka value, you have to take the present value of lease liability plus initial direct cost if there is any. You just have to add back this because they are asking us to write the ROU asset ka value. Okay, fine sir. We have completed Ind AS 116 related questions also. Okay, next let us move to Ind AS 21. Little bit important. Okay, so next standard we will quickly start with Ind AS 21. This is nothing but effects of changes in foreign currency transactions. Okay, effects of changes in foreign currency. Okay, Aram sir, basics are standard Ind AS 21. Again, I am saying this standard is a little bit bigger, but let us focus only on those items which are essential for our exam perspective and MCQ perspective. Okay, that's it. Fine, sir. So quickly come to this part, guys. Here you just have to check only two things. In Ind AS 21, you have to remember there are two types. First one to monetary items, second one to non-monetary items. First one to monetary items, second one to non-monetary items. Always remember one thing. The definition of monetary items and non-monetary items is very, very simple. Monetary items is, for example, whatever the amount which you are getting or whatever the amount which you are paying in case of liability. See, whatever the amount which you are getting from asset or whatever the amount which you are paying to settle a liability, if that amount is fixed or determinable, that is called as a monetary asset. So what is the meaning of monetary asset? See guys, one debtor is there. In my books of accounts, there is one debtor whose balance is 1 lakh rupees, which means whatever the amount which I should be getting from that debtor is fixed. The amount is 1 lakh rupees. Yes, therefore that 1 lakh will become a monetary item. Okay, sir. Similarly, one creditor is there. I have to pay 50,000 to that person. So whatever the amount which I will be paying to that person is fixed or determinable, then that will be called as a monetary liability. Non-monetary asset means, for example, non-monetary items means it can be either assets or it can be liabilities. For example, so one asset is there. How much amount will I get from that is not fixed. PPE, how much amount will I get? It is not fixed, but from data it is fixed. Similarly, I have one loan. How much amount I have to pay to that loan, it is fixed. Therefore, that loan will become a monetary item. Sir, whatever it is, what we have to do, always remember guys, monetary items have to be calculated, have to be remeasured at every reporting period. See, it is very simple. You all know that. Let us assume I have made one credit purchase. I have made one credit purchase on 30th June. Okay, 30th June, the value of that $1 equals to 75 rupees. I have made a purchase of $1 lakh. I have made a purchase of $1 lakh. See, this is foreign exchange. Just a second, guys. Yes, here it is. Yes, sir. This is foreign exchange going on. So obviously, I have to make payment in dollars. Okay, so $1 lakh I have purchased one asset. I have entered into a transaction that 1 year will be my credit period. Therefore, next 30th June of next year, I will be making the payment. But meanwhile, reporting period comes now, that is 31st March. This is my creditor in my books. This is my creditor in my books. Therefore, it will become a monetary item. It will become a monetary item and assume sir on 31st March na $1 equals to 78 rupees. Assume it is. Initially, I have booked at 75 rupees, but now it is 78, which means I have to pay 3 rupees extra. So this 3 rupees is called as exchange loss. This 3 rupees is called as exchange loss and it should be recognized in P&L account. It should be recognized in P&L account. Yes, sir. For example, on 30th June of next year, you have to make the payment, correct? Sir, assume the value is 79 rupees. You have to recognize further 1 rupee loss in next year. You have to recognize further 1 rupee loss in next year because this is a monetary item. Always remember, monetary items are to be remeasured at every reporting period. Yes. Sir, it not always results in loss. Sometimes it can be gain also. Sometimes it can be gain also. So depending upon that, if it is a monetary item, you have to remeasure that asset or liability at every reporting period. Sir, but what if it is a non-monetary item? Just do nothing. If it is a non-monetary item, don't do nothing. This much, if you remember, more than sufficient for MCQ perspective, guys. We will solve MCQs at that time. You will aram se understand. Foreign currency may, if I am having any creditor or if I am having any debtor, initial recognition will be done at spot rate. At every reporting period, I have to find out whether I have got forex gain or forex loss. Both will be transferred to PL account is what you have to remember. Okay, that much is more than sufficient. So let us quickly come to MCQs. So first one, dash are money held and assets and liabilities to be received or paid in fixed or determinable amounts. It is nothing but monetary items just now we have discussed, and this MCQ we have already covered in last part also. Okay, next part, in a conglomerate merger. Sir, what is the meaning of conglomerate merger? Some students will see this word conglomerate merger. They will be terrified. Oh, this MCQ is out of syllabus. I can't do anything. But trust me, conglomerate is nothing but completely different industries. For example, one company is operating in hotel business, another company is operating in mobile industry. Sir, both have merged. Then it is a conglomerate merger. One company is operating in software, another company is operating in real estate. If these two companies merge, this is called as a conglomerate merger. Conglomerate merger means their markets are diversified. They are not all belonging to same industries. This kind of things may, what they will be saying is the merging companies will operate in unrelated markets, having no functional economic relationship. There is no relationship between functions. This is altogether a different operation. This is altogether a different operation. Okay, this MCQ you have to remember. They have asked in your MQP. Model question paper, mock test question paper, they have asked this MCQ. Just remember this conglomerate merger mane different industries if it is occupying, if it is merging, when there is no relation, unrelated markets having no functional economic relationship. This is called as a conglomerate merger. I hope you have understood the point. I hope you guys have understood the point. Yes, sir, we have understood. So next part, just a moment. Okay, check this part. Utkarsh Limited declares the following information. Very, very simple, guys. First one, purchased goods on 12th March 2022 of USD $1 lakh, 78.6. Initial recognition, I will pass an entry. Purchase account debit to creditor account 78.6. Sir, but creditor, is it? Is it a monetary item? Answer is yes. Therefore, we have to check for the nearest reporting date. Sir, my nearest reporting date is 31st March, sir. Sir, what is the value? 79 rupees. But at the time of recognition, I got 78.6. But suddenly, on reporting date, it have increased by 0.4 into 1 lakh. 40,000 is there. Now, earlier, you have to pay only 78 lakh 60,000. 1 lakh into 78.6. But now it is 79, which means you have to pay 40,000 extra. That 40,000 extra is called as loss. Forex loss. That 40,000 extra is called as Forex loss, and that will be recognized in financial year 21-22. I hope this point is pretty clear, guys. Very, 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 very simple. Okay, basics are question. This kind of question only they will repeat in the next two cases also. Check the next part. Sir, J Limited purchased a plant for $50,000. payable after 6 months, but they have entered into a forward contract. Oh, the amount which I will be paying is totally fixed. The amount which I will be paying is fixed. Sir, how much you are going to pay? I am going to pay the 64.25 on that date, whatever the rate. I don't care. My value is 64.25. Oh, on 31st October, na, it is 61.5. Oh, sir, I am getting exchange loss again. You are getting exchange loss, Baba. Now, if you have to pay, you have to pay 61.5, 61.5. But in future, 64.25 you have to pay. Sir, how much loss per dollar? 64.25 minus 61.5. If I do, I will be getting 2.75. Just do into 50,000, you will get 137,500. You will be getting 137,500. I hope you have understood. Yes, sir. Aram se. They are asking for the year ended 31st March 2021. That's it. The figure will be 137,500, which is C, which is option number C. Just take this part, guys. Payta limited declares the following. Same to same question they will ask. Okay, this is the goods ka value 1,76,676, but exchange rate to 31st March, which means 75.91. 75.91. Sir, do I got loss or gain? Arey Baba, earlier you have to pay 76.76, but now you have to only pay 75.91, which means you got gain. Sir, how much gain? 76.76 minus 75.91 into 1 lakh. If I calculate, I got 85,000 ka gain. But in options, they have given only losses. Therefore, the option will be none of the above. You have got 85,000 ka gain. Therefore, the option will be none of the above. None of the above. Yes, sir. Last one, guys. Last MCQ in this index 21. An entity purchases a plant from a foreign supplier for $3 million on Jan 31st, 2025. So this is, we have to understand, this is a credit purchase transaction. Therefore, asset is also there. Asset is also there. Creditor is also there. See, the entry which I will be passing on this 31st Jan is PPE account debit to creditor account or trade payable account. Correct or not? Yes. Sir, how much is the value? 3 million into 72. The date of purchase exchange rate is 72. So 3 million into 72, if I do, I will be getting 216 million. PP account also same 216 million I have to debit. But sir, this trade payable is a monetary item, but this PP is a non-monetary. So on every reporting period, I will not make any changes for this PP. But trade payable, this is a monetary. Therefore, I have to remeasure the monetary item at each reporting period. Yes, sir. But sir, on 31st March, amount is not paid, which means it is still outstanding. Therefore, it is a monetary item. Sir, the closing exchange rate was 75. Yes, earlier it is 72. Now it is 75, which means I got a loss. Sir, how much loss? 3 million into 3 rupees, guys. 9 million ka exchange loss. I have to pay more na. Therefore, my trade payable ka balance will be increased. Since it is loss, it will be debited to P&L account. So entry P&L account debit to trade payable account 9 million, 9 million. End of the reporting period. Now, sir, what is my trade payable ka balance? 216 plus 9, that is 225. Exchange loss to 9 million. Exchange loss to how much, sir? Exchange loss to 9 million, sir. But what about PPE? PPE ka value to, oh shit. PPE ka value to 216 million only. PPE 216. Trade payable 225. Exchange loss 9 million. So if you check PPE 216, exchange loss 9 million, trade payable 225 million. Non-monetary items should not be touched. I hope this point is pretty clear. With this, we have also completed Ind AS 21 also. Just remember, two parts, monetary items at each reporting period will be remeasured, sir. But non-monetary, don't touch. Don't touch any non-monetary items. This is more than sufficient for the exam perspective. Okay? Yes, sir. Understood. Next part, sir. Where it is? This one, guys. Borrowing cost directly attributable to dash. This we have already discussed. This also we have already discussed. Harish Limited Shipka question we have already discussed in the earlier question. I hope you have understood this concept. Yes, sir, we have understood. Okay. Next part. Okay. So next part. Ind AS 23 ka little bit advanced concept. So this we have to understand. You have to remember this concept of exchange difference in borrowing cost. If you remember, if any company borrows a loan in a foreign currency, it will get exchange difference. So to some extent, that exchange difference will be included in borrowing cost is what you have to understand. Okay, simple. As per steps, you have to remember this: step 1, step 2, step 3, and step 4. Okay, fine. So step number 1 may we have to calculate the actual interest cost on foreign currency borrowing to be paid. First step may we have to calculate how much interest which you have to actually pay. Second interest may savings in interest cost we have to calculate. So how I will get this savings in interest cost? Very simple. See, if I have taken such loan in Indian currency, how much interest I have to pay? Calculate that minus step number 1 you have to do. You will always get loss only. Okay, fine sir. Step number 3 may we have to calculate the exchange difference on foreign currency borrowing because this is a monetary item. Therefore, we have to calculate exchange difference. Okay, always remember one thing: borrowing cost will be step number 2, which means savings, or exchange loss as per this. Whichever is lower will be treated as balance. Whichever is lower will be treated as borrowing cost. And if still there is any balance, that will be recognized as a loss in P&L account. This we have to check only in case of a loss. Exchange loss to the extent of borrowing cost or to the extent of borrowing cost will be treated as a borrowing cost. Okay, and the difference if there is, that will be charged to P&L account. Okay, based on this concept only this question is asked. Let us read the question. Sir, Harish Limited have taken loan of $22,000, 5% per annum, constructing a plant. On 1st April 23, which means on the date of loan, exchange rate is 45 rupees. The exchange rate on this is 48 rupees per USD. First step, you have to calculate how much interest I have to pay in foreign currency. See, 22,000 into 5% on the date of reporting period, exchange rate is 48 rupees. So this I have to actually pay 52,800 as per step number 1. Step number 2, so you have to find out the savings if I have taken such loan in Indian currency. If I have taken such loan in Indian currency, sir, how much amount of loan should I take? See, 22,000 into dollar into 45 rupees on the date of borrowing, which means I would have borrowed 9,90,000 rupees, which means this amount. Sir, if I have borrowed in Indian currency, I have to pay 11%. So into 11%, if I do, I have to pay this 1,08,900. I have to pay this 1,08,900. Sir, how much savings I got? 1,08,900 minus 56,100. Okay. Savings is how much, sir? 56,100. Understood. Exchange loss. This is important. Exchange loss. So, sir, on the date of borrowing 45, reporting period 48, which means I got loss. Sir, how much loss? 22,000 into 45 minus 48, which means I got 66,000 rupees loss. Now, this 56,100 or 66,000, whichever is lower, will be added to borrowing cost. Whichever is lower will be added to borrowing cost. So whichever is lower, 56,100 is lower. So my thing is, total borrowing cost which should be capitalized is this 52,800 plus this or this, whichever is lower, which means 56,100. Therefore, the option will be 1,08,900 will become the correct answer. Okay. Third option and fourth option exactly same to same. I have written the calculation here also. Same to same question, guys. Okay. Same to same question. So aram se we can do any of the thing. Either first or second, anything is fine. Okay. So finally, Ind AS 23 is also done. Ind AS 23 is also done. Okay. Fine, sir. Next come to Ind AS 36. Ind AS 36 impairment ka standard. Very basic sa standard, but very important from exam perspective. There are high chances that one 7-mark question will definitely come. If they forget to give any 7-mark which is specifically related to Ind AS statistics, they will definitely ask at least 2 MCQs. 2 MCQs. Okay, so don't ignore this Ind AS statistics. Highest importance A category chapter. This we have already discussed. Okay, this though Aram said basics a point. They have given the carrying amount. They have given the recoverable amount also. You just have to find out the impairment loss. Okay, cost of 51 lakh. Useful life is 5 years. Residual value 1 lakh. Straight line method. On 31st March 24, which means 1 year is only completed. Impairment test they have made. Sir, if 1 year is only completed, what is the depreciation, sir? 51 minus 1 by 5. So 10 years is it? 10 is the depreciation. So sir, 41 lakh. Correct. So carrying amount of 41 lakh. Recoverable amount to 36. So difference is impairment loss 5 lakh rupees. Difference is impairment loss 5 lakh rupees. ठीक है? Yes sir. So just a moment. Hmm. Hmm. So this question तो basic सा question. I'm ignoring this question. Nothing I have to explain this. Okay, see carrying amount they have given. FEL CDD 15,000, value in use 19,000. Whichever is higher will be your recoverable amount, which means 19,000. So sir, carrying amount is 25, recoverable amount is 19. So my impairment loss is 6,000 rupees. Impairment loss is how much sir? 6,000 rupees. ठीक है? Yes sir. Next question is a little bit important. Next question is a little bit important. So let us check this question. Okay, fine sir. Okay, so check this. Details of an asset. Cost of asset they have given 60 lakhs. Useful life 10 years. Salvage value 4 lakh. Useful life remaining is 3 years. Oh, useful life remaining is how much sir? 3 years. Okay, okay, understood. Which means we are standing right now after completion of 7 years. Correct or not? So total useful life for 10 years, but balance useful life is only 3 years, which means we are standing after 7 years are completed. They are saying upward revision is done in last year by 50%. Oh, last year, which means we are standing at 7th year end, therefore 6th year end pay we have done upward revaluation of a 50%. Sir, how much revaluation is done? In order to find out that, first you have to find out carrying amount at the end of 6th year. Carrying amount at the end of 6th year, if you find out, you can add the revaluation amount and then you will get 7th year ka revaluation figure also. I hope you have understood the point. Okay? Yes, sir. So let us find out carrying amount at the end of the 6th year. Let us find out the carrying amount at the end of the 6th year. Okay? Yes, sir. So find out 60 lakh is the cost minus, sir, 60 lakh minus 4 lakh divided by 10 into 6 years are done. 60 lakh minus 4 lakh divided by 10 into 6 years. If you do, you will get depreciation for those 6 years. From that, if you deduct 60, then you will get 26.4 lakhs. 26.4 lakhs. Okay, fine sir, 26.4 lakh we have understood. Now what have happened? 50% ka upward revaluation has been done, which means 26.4 into 50%, if I do 13.2 lakh ka upward revaluation is done. Sir, then what is the revised carrying amount? What is the revised carrying amount at the end of 6th year? So, revised carrying amount at the end of 6th year, 39.6 lakh, which means it will be my opening balance at the year 7. Sir, minus I have to charge depreciation for the 7th year. Sir, how much? 8.9 lakh. Sir, have you got this 8.9 lakh? Are Baba, very, very simple. Sir, the balance useful life to how much, sir? Sir, the balance useful life is only 3 years now. Balance useful life though is only 3 years. Therefore, 39.6 minus salvage life to 4 years divide by 3 if I do, I will get 8.9 lakh. I will get 8.9 lakh. I hope you have understood. I hope you guys have understood the point. Okay? Okay. So, you have to deduct the depreciation for the 7th year. Sir, 7th year ka depreciation is how much, sir? 8.9 lakh. Oh, sorry, I think we are standing at 6th year. Yes, yes, yes. Sorry, guys, my mistake. So, 6th year ka depreciation we have to give. 6th year ka depreciation, sir, have you got is 39.6 minus salvage value to 4 divide by 4 you have to do. Then you will get depreciation for the 6th year. Then final value you will get. Final closing amount at the end of 6th year. Final closing amount at the end of 6th year. Okay. Yes, sir. So now what have happened is current value in use is how much, sir? 1 second, guys. Current value in use to 12 lakh rupees. current selling price to 11 lakh rupees and current disposal cost to 1 lakh rupees. Sir, see, FVLCTD is 11 minus 1, 10, and this current value in use to 12 lakh. 10 or 12, whichever is higher. 12 is higher. 10 or 12, whichever is higher, sir. 12 is higher. 12 is higher. Yes, sir. 12 is higher. So here what you have to do is impairment loss should be charged to P&L account. They are asking you to calculate. Sir, my carrying amount is 30.7 lakh. My carrying amount is 30.7 lakh, but my impairment loss, I mean, recoverable amount is only 12, which means the impairment loss which I have to charge is 18.7 lakh. Difference 30.7 minus 12. If I do, I will get 18.7 lakh. Try to understand. So this impairment loss normally should be transferred to P&L account. This impairment loss should be normally transferred to P&L account. Correct or not? This impairment loss should be transferred to P&L account. Yes, sir. But you have to check. Sir, earlier I am having some OCI ka balance now. Earlier I am having some OCI ka balance. Yes, sir. You have some OCI ka balance. Huh. So this much will be charged to OCI, and the balance amount 18.7 minus 13.2, 5.5 will be transferred to P&L account. 5.5 will be transferred to P&L account. Sorry guys, a small mistake. Here we have already considered the depreciation till 6th year na. Okay, so this is correct only. So this is 7th year ka depreciation. Okay, this is 7th year ka depreciation. Here I will write carrying amount after 7 years. Okay, carrying amount after 7 years. 30.7 lakh. Okay, yes sir, understood the point. So out of this total 18.7 lakh, one second, out of this total 18.7 lakh, this 13.2 lakh will be charged from OCI, and balance 5.5 lakh will be charged to P&L account is what you have to remember. Okay. Yes, sir. We have finally understood this concept. Got it, sir. So balance this fifth question. You can aram se check this question, guys. Nothing I can explain. Aram se very, very basic sa question. Just check that carrying amount they have given, recoverable amount also they have given. You just have to calculate the impairment loss. You just have to calculate the impairment loss. Very, very basic sa question. So we can ignore this kind of a question. Okay. Sixth question, try. You have to try this question on your own. Okay. Okay, no worries. Let me explain quickly. So see, during the financial year ended 31st March 22, the total. Okay. So whatever the extra expenses, which means balance 28 lakh which you have incurred now, that 28 lakh also will be charged as an intangible asset. Okay. So 28 lakh will be charged as an intangible asset. Plus along with that, they are saying further expense incurred on the process is 80 lakh rupees. So this 28 plus 80, both will be recognized as an intangible asset. So my total carrying amount is how much, sir? 108 lakh. 108 lakh. Sir, out of which now, what have happened is recoverable amount is only 72 is what they are saying. Oh, so sad. This total 108 cannot be recovered. Only 72 can be recovered. So bring back the carrying amount to recoverable amount. Therefore, I am getting some intangible asset. I mean, impairment loss ka balance is how much? 108 minus 72, which means I will be getting 36 lakh rupees. Okay? Yes, sir. Understood. Fine. 36 also completed. 38 same to same copy paste questions we have covered in last class. We have covered in the last part. So I'm ignoring this 38 ka questions, 38 ka MCQs I am ignoring. Okay. So quickly come to 102, guys. Quickly come to 102. Okay. Which is nothing but share based payments. Okay. Share based payments is very, very simple. Assume I have purchased some items from the company. I am a creditor to the company. Sorry, company have purchased some items from me. I become a creditor to the company. Now the thing is, the company have to pay me money. I'm asking, don't pay me money. I want shares. I want shares of the company. Now, company have to pay either in the form of shares or in cash whose value is dependent upon the shares. Simply speaking, this is the concept of share-based payments. Simply speaking, this is a concept of share-based payments. But the thing which you have to remember is this is share-based payments which are there now. This can be offered to employees also. This can be offered to non-employees also. From exam perspective, what you have to remember is just to focus on these share-based payments offered to employees. I think you have already know this term which is called as an ESOP, employee stock option. Correct or not? Yes, sir. We have understood this employee stock option concept. I will be dictating one formula. Just by heart that formula from MCQ perspective. High chances that they will ask only that thing. Okay? Sir, what is the formula? Formula is nothing but expense to be recognized in each year. Expense to be recognized in each year. Sir, how much expense do I have to recognize in each year? Just remember the formula. Number of employees expected to number of see the kind of condition which they will keep is if you want shares now you have to stay in the company for certain number of for certain number of days. This is the condition which they will normally keep. So what you have to write is number of employees expected to present in the company till the vesting period. Okay, that multiplied by how many options you are giving, how many shares you are giving to employees. So that should be multiplied with the number of options, and again it should be multiplied with the most important fair value of option on the grant date. On the grant date divided by total vesting period. Total vesting period. Okay, divide by total vesting period into expired vesting period. Into expired period. Ultimately, minus you have to write expense recognized earlier. Minus you have to write expense recognized earlier. This is the normal formula which you have to remember in this Ind AS 102 standard. Okay. While solving example, you will understand, but just try to understand. How many employees will satisfy the vesting period condition? Those many employees I will take, multiplied by number of options, multiplied by fair value of option on the grant date. Don't take each reporting period. Grant date, they will give grant date is nothing but what is the date which they have offered options. Multiplied by expired vesting period divided by total vesting period. Minus if any expense is recognized earlier, you have to deduct that thing. Okay, more than sufficient for whatever the MCQs which we have to discuss here. Okay, first MCQ, check that share based payment is dealt by Ind AS 102. Already know that, already discussed earlier. Okay, check the next question. On 1/4/2022, Aurora Limited granted 100 share options to each of its 200 employees. The options will vest on 31st March 2025, which means 3 years is the vesting period. They have to remain as employees till 31st March 2025. On 1st April 22, the fair value of one share option is 200 and had increased to 240. This is irrelevant. That's what I'm saying. Fair value of option on each reporting date is ignored. You have to take fair value of option on the grant date. Grant date is this. They are saying on this date fair value is 200 rupees. Okay. 200 rupees. Next. On 1/4/22, the directors estimated that 180 employees would qualify for these options. At 31st March 23, this estimate was 180 employees. You have to take not 200 employees. You have to take how many employees will remain in the organization for the next 3 years. They have to remain for all the three. Whoever employees have remained for all the three, only for those employees only we will be giving the shares. Okay, the formula, sir. Number of employees. See, first of all, the question they are asking you to calculate the amount to be recognized as an expense for the year ended 22-23. If you want to know about 22-23, you have to also find out 21-22 also. because cumulative formula I have said, correct? Okay, yes sir. So now try to understand. Sir, first year may, that is 21-22 may, what is the expense which I have to write? Formula, number of employees expected to remain on that date, 180 employees is what I have expected. Okay, so 180 employees multiplied by 100 options into 200 into 1 by 3 first I have written. For 21-22 I have written. Okay, so for 21-22 my expense would be how much, sir? My expense would be 200 into 1 by 3, which means 12 lakh rupees. Okay. Okay, so sir, see here though 1 by 3 I have to take. If I take 1 by 3, the balance will be only 12 lakh rupees. The balance will be only 12 lakh rupees. Correct? Yes, sir. But okay, so last year pay I have booked 12 lakh rupees as expense. But sir, current year, that means second year pay, what will be happening is my expectation got changed. My expectation is I am expecting now 190 employees will remain in the organization. So same formula, 190 employees into 100 number of stock options into 200. Sir, what is this 200? 200 is nothing but fair value. Multiplied by this time 2 years are completed. This time 2 years are completed, therefore it will be 2 by 3. Minus sir, expense I have recognized in earlier year 12 lakh, so I have to deduct this. Balance amount 13 lakh 33,330 will be recognized as an expense. Will be recognized as an expense. Okay, fine sir. Okay, so next question also exactly same. PUA limited grants, same formula. Number of employees, sorry, number of options into number of employees into fair market value on the grant date multiplied by expired vesting period divided by total vesting period. If you do, you will get the formula. Okay, aram se. Easily it can be done. Next topic though, Ind AS 108, which is nothing but segment reporting. Short and sweet standard. This related standard ka discussion already we have in last part ka MCQ discussion. So this we have already covered. These two also we have, these three also we have already covered. Okay, quickly come to last part. Very important. Okay, so here what I have to do to identify the asset as a reportable, to identify any segment as a reportable segment, you have to check three categories. Sir, what are the three categories? First one to asset criteria, second one to result criteria, third one to turnover or revenue criteria. Sir, first one to asset criteria, result criteria, third one to turnover or revenue criteria. Sir, what about this result criteria? Asset criteria, take the total assets into 10%. Whatever the assets whose asset ka value is more than 10%, every segment will become reporting segment. So here 88 into 10%, 88. So whatever the assets which are having more than 88, more than 88, more than 88, more than 88, more than 88. So A, B, C and E will become reportable segments. Sir, what about second test? Second test to result criteria. Here you have to be a little bit careful. Result criteria may, sir, some segments may perform well, they will get profits, and some segments may not perform well and they will get losses. What you have to do is just take the profit of all profit making segments, just take loss of all loss making segments, take whichever is higher. Take whichever is higher and calculate 10% on that amount. Take the total profit of all profit making segments, total loss of all loss making segments, calculate 10% of each and take whichever is higher. And take whichever is higher. Whether your profit is more than this or whether your loss is more than this, that will become your reportable segment. I have taken profit of all segments and I have find out it was 400. Loss of all segments is 800. So I have calculated 10% on both and higher will be 80. So whatever segment ka result which is more than 80, that will become a reporting segment. Simple. So check this. More than 80, A, B. That's it. All these are not reportable segments as per second criteria. So A and B. Third part to turnover or revenue. Same to same turnover or revenue. Just to check 4,800 into 10% to 480. First, second only will become reportable segments. But whatever criteria it is satisfied, totally fine. First may ABC, second may AB, third may AB. It is not necessary that it should satisfy all the three. No, any one it will become a reportable segment. Okay, so fine, sir. So answer may, if you observe,
A, B, C, E will become reportable segments, which means D option will be correct. Okay. They have given some data deferred tax asset, just to confuse you. Okay. Some people will be terrified. Oh, deferred tax, we have taken choice. Don't worry, it is not required. Just ignore that part and do whatever you know. It will be correct in maximum cases. Okay. So Ind AS 108 also done. Next, Ind AS 113. Very basics are standard. Fair value measurement already covered. Already covered. Already covered. Already covered. Everything we have already covered. So Ind AS 113 I am not discussing here. Okay. Ind AS 113 I am not discussing here. Next, the last standard which is there is Ind AS 115. The last standard which is there is Ind AS 115. Let us complete this quickly. Okay, fine, sir. Okay, so fine, sir. Coming to this Ind AS 115. This is also, I think, exam question only which they have asked. Alaknanda limited question. And again, this name Tulsi, if I see this Tulsi, I will easily remember this June 23 ka exam question paper. This is way tougher. Okay, June 23. Fine, sir. We'll check this. First, come to Alaknanda. This is a question relating to deferred credit. Deferred credit ka concept, if you remember, always revenue will be recognized on cash price of the asset. Interest component should be recognized separately. Normal cash price only we have to check. Okay. If you read, you will understand. Alaknanda have sold the furniture for 80 lakhs to a customer on 1/4/23. The payment against which was received after 12 months with interest at rate 3%. Sir, how much the customer is actually paying to me after after 1 year? 80 lakh plus 3%. The customer is actually paying 82 lakh 40,000. Sir, how much the customer is actually paying, sir? The customer is actually paying 82 lakh 40,000. 82 lakh 40,000 the customer is actually paying. But sir, can I treat this entire 82 lakh 40,000 as revenue? Answer is no, because it includes some part of interest income also now. Sir, I have to calculate the present value. Answer is yes, you have to calculate the present value. In order to calculate the present value, they have given the discount rate also, which was 8%, which is market interest rate. Okay, so this is simple question. Only one payment will be made afterwards. So 82 lakh 40,000 divided by 1.08 if you do. 7629,630 you will get. This is cash price. And whatever the balancing figure is there, na, which is nothing but 6,10,370, it is nothing but my interest income. I hope you have understood what I have written. Okay, Aram say how much amount the customer is paying, that will the customer will pay after 1 year. Okay, but that entire amount I cannot treat as revenue because it includes some sort of cash price. I mean some sort of, what should I say, interest income also. So that should be separated and accounted for separately. Yes. So 7629,624 ka revenue and 610,370 ka finance income you have to recognize. Okay? Yes, sir. So second typical question. Neem Tulsi Limited, a firm of contractors, provides the following details for the year ended 31st March 2023. Okay? Yes, sir. Fixed contract price. This is very tough question. Typical question. Again, because it is asked in June 2023. Okay? But just whatever I have explained, just listen that part. This is, what should I say, a revenue may, if you remember, percentage of completion. There is one concept which is called as percentage of completion. Okay, based on that we have to recognize the revenue. Based on percentage of completion, we have to recognize the revenue. Okay, fine, sir. So first part. Fixed contract price with escalation clause is how much, sir? 1,000 lakh rupees. Work certified is 500 and work not certified is 109 lakh. You have incurred this 500 also, this 109 also you have incurred. But the thing is, out of this, only 500 is certified and 109 is not yet certified. Therefore, it is in work not certified. But they are saying out of this, it includes some 4 lakh rupees which it is still unsold, I mean, which is lying in the closing stock. Okay, fine. Estimated further cost is 495. Progress payment received is 400 and progress payment to be received is 140. Estimated escalation in cost by 5% and accordingly the contract price is increased by 5%. So first of all, what is this escalation? Escalation is nothing but, see, these contracts and all will be generally based on estimated, will be generally done based on the estimation only. So what they are trying to say is, sir, in case if the prices of the raw material or labor, etc., shoots up, then the thing is, contract may, if there is any provision that whatever such increase is there, up to some extent it will be borne by the contractee only. This kind of a clause, if it is present in the agreement, this is called as an escalation clause. This is called as an escalation clause. Okay. So what they are trying to say is, if any cost is increased by 5%, we are there. We are there for next 5%. Okay, but if it is increased further by 5%, we are not responsible. We are not responsible is what the contractee have said. Understood? Yes, sir. So first what we have to do is, sir, what is the total expected cost to complete the project? Let us calculate. Sir, how I will get? You have to identify what is the cost which I have incurred till date. Cost incurred till date includes work certified also and work not certified also. Which means 500 plus 109, ideally 609 have to become my cost incurred till date. But sir, out of this na 4 lakh. Out of this na 4 lakh is not related to, it is still there in closing stock. This I have not incurred. It is still there in closing stock now. Therefore, I have to ignore this 4 lakh rupees. If I have expended, then I can consider this 4 lakh rupees also. It's still there. I have not utilized. Therefore, 605 will become my cost incurred till date minus, sorry, I have to add estimated further cost, which is 495. So 605 plus 495, if I do, I will get 1100 as a total cost. But my contract price is only 1000, but they will allow 5%, which means 1000 into 5%, which means 50. So it will become 1050. They can bear. But your cost itself is 1100. Therefore, this extra amount 50 have to be borne by you only, which means it will be recognized as a P&L. It will be recognized as a loss in P&L account. This is the thing which you have to understand. Okay. Yes, sir. Baki questions, very basic सा question. This kind of a question is already there in our workbook, which we have discussed in regular class. Okay. This also you can आराम से check. They are saying some goods are damaged, so you just have to check 4 sets are found damaged. You just have to recognize the revenue only for the parts which cannot be returned. Only for those items only we have to recognize the thing. Okay, fine, sir. Understood, sir. So finally, we have completed all indices. Very important. All indices we have completed. Okay, so next aspect, let us quickly move to business combination, guys. Okay, let us quickly move to business combination. Business combination में maximum questions we have covered in the last part only. Same to same kind of questions are there here also. This question we have already covered. If any new question is there, I will explain. This also we have already covered. Same figures, exact copy paste of figures also I have remembered. I have already covered. 80,000 also I have covered. I remembered this question also. 300 lakh also I have covered. Goodwill ka question. This also coal limited, gold limited. Yes, we have covered. This also we have covered. ठीक है हाँ what should I say this तो not chain holding. This question is acquisition, step up acquisition. This also we have studied in last class. Okay, everything. This also we have checked. I'm remembering the numbers. This also we have checked. Okay, every MCQ I am finding in the last part. So there is no point in discussing all those things once again. Okay, so this question also, if you observe, Dawn Limited. Very basic sa question again. Same to same point. Same to same point. Okay. Every question we have already discussed. So my point is, there is no new question which you have to follow here. This question also we have discussed, if you remember. Swap ratio 3:7. There we have concluded they have forget to given the number of shares, but even here they have given the number of shares also. Okay, just refer there. Okay, this question we have already covered. Okay, fine. So with this we can conclude. What should I say, sir? Business combination is also done. Business combination is also done. Okay. This is the only new question which I can answer, but this is also very basic question. See, sir, two companies have merged together to form a new company, which is Mazoo Limited. Sir, they have given total consideration of 130 lakhs. This you have to apportion in between net assets. That's it. Okay, 90.5 belongs to Mahi and 97.5 belongs to Pooja. Just apportion on the basis of net assets, you will aram se understand. This 130 lakh, see 130 lakh should be apportioned by 90.5 plus 97. So total is this into, if I calculate 90.5, I will get for Pooja. Or if I calculate 97, I will get, sorry, 90.5 I will get for Mahi and 97 I will get for Pooja. That's it. Basic question. Try this. Answer will come this only. Okay. So business combination is done. Very, 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 very aram se we can do. Next thing though, if you observe consolidation also, most questions we have already checked. Okay, let me just check if any new question is there. Let us discuss. Otherwise, we can ignore this consolidation the topic also. Okay, so let me check. Let me check. Surendra Limited का question we have covered today only, but in URP. Default tax mein we have covered this point. Correct. Yes, sir. So. This 11th question let us discuss. 11th question let us discuss. Okay, fine, sir. So check this question. Little bit important. Okay, let us quickly come to this 11th question. Important. Okay, sir. Fine. Okay, so check this. Ganga Limited have purchased a 30% interest in Sagar Limited for 25 lakh rupees. Sorry, 2,50,000 rupees. On that date, na Sagar's shareholders equity was 5 lakh. Arey baba, this is nothing but associate. Ind AS 28 na. Easy sa point. No consolidation, nothing. Just how much income you have received, whatever share the associate have earned, you just have to take the proportionate investment value and that will be added to your investment. That's it. Simple. See, sir, they are asking me to calculate the carrying amount on 31st March 2023. Sir, what is the actual cost which I have purchased? I have purchased at 2,50,000 rupees. Yes, sir, 2,50,000 rupees. Sir, now what have happened? Sagar Limited have got 1,50,000 ka income. So, sir, this 1,50,000 may I will get 30% ka share. So, 150,000 into 30%, then 45,000 will be my income. But sir, 40,000 dividend to pay. If dividend paid, my net assets will be decreased. Na? So 45,000 into 30%. Sorry, 40,000 is the dividend. So sir, 40k into 30%. How much? 12,000. So this is the carrying figure. 250,000 plus 45,000 minus 12,000. 2,83,000 will be my carrying amount of investment. That's it. That's it will be the answer. 2,83,000 will be your answer. ठीक है sir, ठीक है sir, ठीक है sir. Next part, same to same copy paste question. Just read the question, sir. 2 lakh is the cost. Yes. 25% is the shareholding. Sir, current year may it have earned 20,000 net profit and the OCI 4,000. Sir, total is how much, sir? 24,000. So just take 24,000 into 25%. I will get 6,000. Sir, but dividend also they have paid. How much? 8,000 dividend they have paid. So 8,000 into 25%. So 2,000 I will deduct. So my balance will be 2 lakh plus 6,000 minus 2,000. So it is 2 lakh 4,000. So option D will be the correct answer. Option D will be the correct answer. Okay? Yes, sir. So I think all the questions we have around understood. This question is a little bit important. So let us quickly take this question. BM Limited ka question. Okay. BM Limited acquired 90% shares of CM Limited for 10,80,000. When the fair value is 10 lakh rupees, during this date, CM Limited made a total comprehensive income of 2 lakh rupees. On that date, BM sold 15% holding to outsiders. How much is the gain which is credited to other equity? We have to understand. See, so sale of stock without losing the control. Sale of stock without losing the control. Sir, how much gain credited to other equity? We have to find out. This also we have already discussed. We have written this point also in our notes. Okay. So we have written this point in our. Okay. So fine, sir. In this question also, if you observe, see, net assets ka value is 10 lakh. Comprehensive income is 12 lakh. So my total net assets are how much, sir? 12 lakh rupees. out of which 15% it have sold. So if I calculate the carrying amount of NCI, I will get 1,80,000. But sir, I have received 2,20,000, which means I have got a profit. I have got a profit now, sir. How much is the profit? 220 minus 180, it is 40,000 ka profit. 40,000 ka profit will be charged to PL account. 40,000 का profit will be charged to P&L account. ठीक है? That's it, sir. All other questions we have already know, guys, how to do. Okay. So this questions also, recent developments also, if you observe, this covered, 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 covered. This formula also we have covered. Human resource report, yes. Covered. Market value added, it is just the formula. Okay. It is nothing but current total market value of the capital and contributed by investors we have to take. Okay. Total market value minus debt. Minus debt we have to take. Okay. Everything we have to check. So next part, earnings call done. This is a little bit important, so please check this 16th MCQ. Next, this 19th one you just have to remember, nothing to explain. Okay, just check this part. This extensible reporting company ka, what should I say, applicability also just to check. Just check. CSR expense we already have no, but they have given here. They have given just a normal numerical figure. You can just check that part. Okay. Market value added ka formula we have already know that. Market value added ka formula we have already know that. Just we have to substitute that formula. Aram se we can get this point. Okay. Economic value added also. Just to check this part. Economic value added ka formula we have already know that. No PAT minus. No PAT minus. Weighted average cost of capital we have to do. Okay. Weighted average cost of capital into KD we have to do the total capital. Total capital employed, then we will get the economic value added of the entity. Okay? Yes, sir. Normal formula we just have to check. Government accounting also, if you observe, this done, this also done, this also completed. All these things are aram se we can check. Okay, everything we have already completed. IGS2 done. This is also done. Consolidated fund done. Okay, so everything we have already done is what I'm thinking. So next thing which I was checking is, okay, yes, okay. So let me complete this part also, guys. CSR ka point, we already know that. So CSR to 2% of average profit of last 3 years we have to check. CSR ka value to 2% of average profits of last 3 financial years we have to take. So currently we are standing on 2021. So last 3 years as in 19, 20, 18, 19 and 17, 18. Which means these 3 years ka average we have to take. So 20 plus 15 plus 10 into, sorry, divide by 3 if I do, I will get 15 crores. 15 crore ka 2% you have to make. 15 crore into 2%. I will get 30 lakh rupees is the minimum amount of expense which I have to spend. Sir, but how much they have already spent? They have already spent 7 lakh and 3 lakh. For employees of the company and their families, always remember, if any expenditure have incurred only for the purpose of employees, that will not be allowed as CSR. That will not be allowed as CSR, which means 7 lakh and 3 lakh both will not be allowed. So how much I have to spend? You have to spend 30 lakh rupees. So this is not allowed. We have to still spend 30 lakh rupees. So they are asking what is the shortfall, and the shortfall is 30 lakh rupees. I hope this point is clear. Yes, sir, this point is clear. Fine. So I hope that's it, guys. Okay. So finally we have completed the MCQs portion. So I think just a moment, what have happened? Okay, so this market value added question, just to practice this, just use the formula and we can aram se get that. You can use SFM knowledge and you can aram se crack that part. So I think all the topics are completed. Okay, let us come to that NBFCs ka portion and all. Let us quickly check that part also. Where is NBFCs? NBFCs. See guys, already covered in the last. Covered. This also we have covered. This thing though, just provisioning norms. Just remember the provision ka percentages and aram se we can check this part. Okay, same to same this also. This also we have already covered. Okay, so this I am not discussing right now. This Ind AS 109 also, everything we have already covered, guys. This question I have already said. In last class also, similar question is already there in our workbook. So quickly check that question. Okay, so aram se we can understand. Rest of the questions we have already solved in last class. Nothing is new, nothing is important as such. Okay, so we can aram se quickly check those MCQs. And then financial instruments ka topic also will be done. Next is valuation of shares and goodwill also. Majority of the questions we have already solved. See this question, goodwill valuation and all we have solved many questions. So I think we can aram se check these questions also, but you can try this 11th question, which is a little bit new, but just refer the formulas what we have discussed. You can aram se solve this question, nothing big deal, not a big deal. This kind of a question also, similar question we have already seen in our workbook. Okay, so just check this question, no need to worry at all. Okay. So I guess that's it, guys. Finally, we have completed even the MCQ ka portion as well. Okay, finally we have completed the MCQ ka portion as well. So with this, our things are done. Okay? Yes, sir.